Good evening, everyone. Welcome to the channel. Today I am going to talk about Zscaler, Inc. annual report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Zscaler Inc. offers a wide range of cloud security services and products across various industries. The company's key business areas include cyber threat protection, Zscaler Internet Access, Zero Trust Firewall, Cloud Sandbox, and Zero Trust Browser Data Security, Web and Email DLP, Endpoint DLP, BYOD Security, Multimode CASB, Unified SaaS Security, DSPM, ASPM, Public Gen AI Security, and Microsoft Copilot Data Protection Zero Trust Solutions. Zero Trust Branch, Zero Trust Cloud, and Zero Trust Gateway Security Operations, Data Fabric for Security, Asset Exposure Management, Risk 360, Unified Vulnerability Management, Deception, Managed Detection and Response, and Managed Threat Hunting. These services cater to various industries including automotive, airlines, finance, healthcare, technology, and more. The significant increase in Zscaler, Inc. ZS stock price over the past year can be attributed to a combination of factors. Exceptional financial results, driven by robust revenue growth, increased annual recurring revenue ARR, and strong calculated billings, have consistently surpassed analyst expectations. The company's cloud-native, AI-powered cybersecurity solutions are in high demand due to the increasing frequency and severity of cyberattacks. Zscaler's leadership in Zero Trust, Exchange platform and innovation with new AI tools like Zscaler AI Guard have also contributed to investor confidence. Positive analyst upgrades and price target revisions, as well as industry momentum and strategic acquisitions, have further bolstered the stock's performance. The primary drivers of revenue growth for this company can be attributed to several key factors. Firstly, subscription and support services have been instrumental in driving revenue, accounting for 98% of revenue in fiscal 2025. The significant increase in these services is a testament to the company's successful shift towards recurring revenue models. Geographic expansion has also played a crucial role, with notable growth in both the United States, 32.6%, and rest of the world, 36.8%, regions. Channel partners have been essential in driving this growth, accounting for 88% of revenue in fiscal 2025. Investment in research and development has also contributed to revenue growth, as the company continues to innovate and expand its product offerings. However, deferred revenue has decreased, indicating potential changes in customer behavior or business model shifts. Overall, a combination of subscription-based services, geographic expansion, and strategic partnerships have driven revenue growth for this company. Net income and profit margins. A changing landscape, the financial performance of a company has been marred by negative net income in all annual periods since its inception. Net losses have consistently increased, with figures rising from $202.3 million in fiscal 2023 to $57.7 million in fiscal 2024, and further to $41.5 million in fiscal 2025. On the other hand, profit margins have shown a mixed trend. The gross profit margin initially improved from 77% in 2023 to 78% in 2024, but then decreased slightly to 77% in 2025. However, the GAAP operating margin has seen an improvement, rising from -15% in 2023 to -5% in 2025. The reasons behind these changes are not explicitly stated, but it is clear that the company's financial performance has been a subject of concern for investors and stakeholders. The increasing net losses and fluctuating profit margins necessitate a closer examination of the company's operations and strategies to identify areas for improvement. The company's financial performance indicates a consistent generation of positive operating cash flow. Over the past 3 years, net cash provided by operating activities has been steadily increasing, with figures of $972,453 million in 2025, $779,846 million in 2024, and $462,343 million in 2023. This trend confirms that the company is generating sufficient cash from its operations to support its financial obligations, indicating a healthy financial position. The company's debt level or interest expenses have undergone significant changes over the past few years. Specifically, interest expenses have decreased by 43% from 2024 to 2025, and by 97% from 2023 to 2024. This trend is consistent across multiple pages of the financial summary, indicating a substantial reduction in interest expenses in 2025 compared to previous years. The company's financial performance varied across different segments and regions. The channel partner network was a standout performer, contributing 28% of revenue for fiscal 2025. In contrast, international markets struggled, requiring significant management attention and financial resources. India also had mixed results, with both positive and negative aspects to its performance. Notably, the domestic market's performance was not explicitly mentioned as poor or good. However, certain regions showed notable revenue growth, with increases of $505,344 from 2024 to 2025 and $550,819 from 2023 to 2024. Management is optimistic about the company's outlook, citing growth opportunities through subscription sales and investments in research and development. The company is expanding its product offerings through strategic acquisitions, such as the Red Canary acquisition, which will enhance its security operations capabilities. Management also emphasizes the importance of customer retention, with a strong focus on maintaining long-term relationships with clients. To mitigate risks, the company uses derivative instruments to manage volatility and interest rates. Overall, management's strategy is centered around driving revenue growth, while prioritizing financial reporting transparency and risk management. The company has made several strategic moves through acquisitions and divestitures to shape its financial landscape. In terms of acquisitions, the company has purchased capped call transactions related to its 2025 notes, acquiring approximately 2.4 million shares. Additionally, it has explored potential business acquisitions, although specific details are not provided. On the other hand, the company has made a significant divestiture by repaying its convertible senior notes due 2025. This involved paying $1.15 billion in cash and issuing 3.8 million new shares. The company has a history of not paying dividends. While it has engaged in share buyback activities through employee stock purchase plans, ESPP, and modified equity incentives, these actions are distinct from traditional share repurchases or dividend payments. Supply chain disruptions, a growing concern. The extracted summaries reveal significant concerns regarding supply chain disruption. On page 41, reliance on a limited number of suppliers for critical components poses a risk to the continuity of operations. Furthermore, page 42 highlights various factors that can lead to component shortages and delivery delays, including natural disasters, international conflicts, and supplier insolvency. Additionally, integrating diverse business cultures has been identified as a challenge in supply chain management. Page 2. These disruptions can have far-reaching consequences for businesses, making it essential to address these concerns proactively. That concludes the financial summary for Zscaler, Inc. Feel free to comment below, and I will be happy to answer them when possible.